Hello viewers, my name is Ajay Kumar. I'm an accountant, a CPA at Science CPA Services. In today's tax tip, we'll talk about people with foreign income. If you have foreign income, if you have foreign assets, what filing obligations you have? Do you have to pay double taxes? What's FBAR? What's FATCA? Today's episode in tax tips is all about foreign income and how do you avoid it and what obligations you have.
Hello everyone. Today we are going to talk about foreign earned income exclusion and foreign reporting of any taxes or any assets that we need to report. So, Mr. Kumar?
Where do you want to start, Nina? Do you want to start with foreign reporting first or foreign income exclusion first?
So, Mr. Kumar, how about foreign asset reporting?
Absolutely. As you rightly said, Nina, there are two separate issues at play here. Foreign asset reporting and paying taxes on the foreign income. So in foreign asset reporting, it's only the reporting requirement that you have. You don't pay any taxes. Say the first one is FBAR and the second one is FATCA. We call it foreign asset reporting. In FBAR, foreign bank and accounting reporting, if you had more than $10,000 in all the accounts combined together at any given point of time during the year, you have the FBAR filing requirement. You have to report all the amounts, all the bank name, the bank address, account number, amount. Take an example. If you had, let's say, $15,000 in PNC Bank in India or PNB Bank, whatever bank you have in India, then you move this money from PNB Bank to a different bank. You have to report both the amounts. If you take this money out before the end of the year, you still have the reporting obligation only because at one point of time, you had more than $10,000 in all the accounts combined together, and that's the FBAR.
How about foreign earned income?
Absolutely. So in foreign earned income, there are two types of situations. You have income coming from an asset. Let's say, for example, rental income. It's not earned, but is still a foreign income. Or you have a job or you have something that's creating income for you. The interest income could be there, rental income could be there, or you have a job over there, you had a job, or you have some pension income coming from there. So all your foreign income needs to be reported and taxed in US as well. The good thing is there is no double taxation. Under Section 221, India and US has a tax treaty. So all the taxes that you may have paid in India can be deducted over here to a certain extent. And we'll talk about 1116 filing or deducting those taxes as a allowance, as a deduction on your US taxes. Take an example. Let's say if your foreign income is $100 and you paid $10 taxes in India. You have to include that $100 of income on your US tax return. And let's say your tax liability turns out to be $15. And you say, no, hold on, I only paid $10 on this income. And we'll say, okay, fine, give me another $5. If you paid $20 in India, we will not refund you the money. But it's not double taxes. You end up paying higher taxes depending on your tax bracket in each country. But it's not double taxation. That's foreign income taxes. The other thing you could do in this situation, Nina, there is something called foreign income exclusion. There are strict rules around it. You cannot be here in this country for more than 30 days in the whole year. But if you have been outside this country for at least 331 days or more, in that case, you can qualify for foreign earned income exclusion. What it means is your foreign income up to $107,600, and this depends on CPI. This keeps increasing every year. For 2019, this was $105,900. Now for 2020, it's $107,600. Up to that type of income, the earned income we are talking about here now. So earlier we were talking about the unearned income. Unearned means something that you did not have to work for to earn it. The rental income, the interest income, we refer those type of income as unearned income. The earned income where you have to work, let's say a lot of expatriate people who have been here, they have US citizenship, they have the green card, and then now they're working in India. So they are working in India, they're earning money. They can exclude up to $107,600 of earned income if they have not been here in US for more than certain number of days.
So, Mr. Kumar, how about the inheritance, like any land or anything from any foreign country?
Absolutely, that's a great question. We are all foreigners in this country. We all have a lot of properties that because this is the first generation, most of us, so we do have inherited property, Nina. That's a great question. So inherited property has a different set of filing requirement. They don't fall into FBAR. FBAR is more about foreign bank account reporting. FBAR stands for foreign bank account reporting, where this limit of $10,000 is for liquid asset, we call it CD, FD, mutual fund, cash bank account, savings account, checking account. All these are limited to FBAR up to $10,000. When it comes to inheritance, let's assume somebody inherited a house, a land. This is not considered as a liquid asset. So the filing obligations are there, but the limits are different. If you had more than $100,000 of assets at the end of the last year, or more than 150,000 at any point of time during the year, then you have FATCA filing requirement, 8938 filing requirement. But please understand, take an example here. Let's say you inherited a property worth $100,000 during the year. You sold the property and you bring the money here. You don't have 8938 filing requirement. The rule is at any point of time it has to be more than $150,000. At the end of the year, the limit is $100,000. You may have the FBAR filing requirement because for one day you had some money in your account when the property was sold, but you probably don't have the FATCA 8938 filing requirement here.
So, Mr. Kumar, how about the land? If there's no income, still they need to report it?
Well, that's a great question. So there are two different sets here. Reporting obligations under FATCA, under fixed asset reporting obligations. As long as the land is worth less than $100,000, you don't have a reporting obligation. So the reporting obligation kicks in if you had more than $150,000 worth of assets during the year, or $100,000 worth of asset at the end of the year. Then you have to report it. But if your land is worth less than $100,000, you do not have to report it.
And about any income, even if it's like $20, do they need to report it?
Well, yes, you do. The income has no limit. If you make $1 of income, you still have a reporting obligation, you still have to pay tax on it. There may not be any tax liability on it because it's $1 only. But if you have the income, you have to include that income on your US tax return, but you have the right to deduct the taxes that you paid in India or in a foreign country. So take an example. If you paid the taxes over there, we will compute the tax based on your income tax bracket over here, and then we'll give you the benefit of the taxes that you paid in a foreign country. We call it TDS. So you still have the reporting obligation, you still have the filing obligation, even if the income or rental income or the interest income is very, very low.
So, Mr. Kumar, what are the tax tips you can give to summarize the whole show?
Absolutely, absolutely. So there are a lot of reporting requirements. There is FBAR, there is FATCA, 8938, foreign income exclusion, reporting the rental income, the interest income, the job, earned income. So my tax tip, you must file your taxes. Just because you are not here or you feel that income is in India, nobody will ever find out. That's not true. We will find out. You must include all your income when you're filing your US taxes. You must file your taxes. You must know what forms are supposed to be filed. FinCEN 114, FATCA 8938 or FBAR if you cannot file the taxes on time. See, remember, the tax filing year is different in India than what we have here. We use calendar year over here, so the filing obligations are April 15th over here. In India, they use fiscal year from April 1st to March 31st. So over there, the filing obligations are till June 30th. So please remember, if you don't have enough information, if you cannot file your taxes on time, at least try to file an extension for it. Again, my name is Ajay Kumar. I'm an accountant, a CPA. I hope you liked the episode on tax tips. Until next time, stay tuned.